Hey everyone, welcome back to the channel. Today we're diving deep into one of the most talked about high-income ETFs of the past year, MSTY, the YieldMax MSTR Option Income Strategy ETF. If you've seen headlines showing triple-digit yields or jaw-dropping monthly income numbers, you've probably wondered, is this real? And more importantly, should you worry about MSTY in 2025? In this video, we'll break it all down: what MSTY actually is, how it works, why it's been so controversial, the major risks and potential rewards, and my honest view on whether you should be concerned holding it this year. So grab a coffee, hit that like button if you enjoy in-depth ETF breakdowns, and let's get started. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us, and remember to comment and share. Let's start with the basics. MSTY is part of the YieldMax family of option income ETFs, which use covered call strategies to generate high monthly income. Specifically, MSTY targets MicroStrategy, ticker MSTR, the company known for holding massive amounts of Bitcoin on its balance sheet. Here's what MSTY actually does: instead of owning MicroStrategy stock directly, MSTY uses derivatives, financial contracts that mirror the performance of MSTR. The fund then sells call options on that exposure. By selling those options, the fund collects option premiums, cash paid by traders who buy those calls. That premium becomes income, which MSTY distributes to investors every month. Sounds good, right? Free money. Not so fast? There's a trade-off, and it's a big one. When MSTY sells call options, it gives up most of its upside potential. If MSTR stock soars, MSTY's returns are capped. But if MSTR crashes, MSTY still takes the full hit. So this fund behaves kind of like an income engine strapped to a volatile rocket, MicroStrategy, which itself rides the ups and downs of Bitcoin. That's why MSTY's yields are so high. The volatility in MSTR means the options are expensive, creating huge premiums. But that same volatility also means the ETF's price can swing wildly. So now that we know what MSTY does, let's see how it's been performing in 2025. As of this year, MSTY's performance tells a story of both opportunity and danger. After launching in early 2024, MSTY attracted attention fast, especially when investors saw yields north of 80%, even 100% annualized. But since then, its share price has fallen sharply. From highs around the mid-40s, it's now hovering in the low teens, roughly $13 per share. That's more than a 70% decline. So how can a fund that's paying such big monthly distributions keep dropping in price? It's because those distributions aren't pure profit. Many of them come from the option income, but some of it is return of capital, meaning you're essentially getting part of your own investment back. Meanwhile, because MSTR, the underlying stock, is tied to Bitcoin, every major crypto move shakes this ETF. When Bitcoin rallies, MSTY may rise slightly, but its upside is capped. When Bitcoin falls, MSTY falls hard, no cap there. So in short, MSTY's 2025 story so far is one of high yield, high volatility, and significant price erosion. That brings us to the big question: what are the real reasons investors should be worried about MSTY going forward? There are several, and they're worth understanding before you chase those tempting yields. Reason 1: full downside exposure. If MSTR tanks, MSTY tanks too. You're getting the full ride down, but only a partial ride up. That asymmetry is brutal for long-term investors. Reason 2: the yield may not be sustainable. The enormous payouts rely on high volatility. If Bitcoin or Mr. Calm down, the premiums from selling options will shrink, and distributions will likely fall too. Reason 3, complexity. This isn't your typical dividend ETF like SCHD or VIG. It's a derivatives-based strategy that most retail investors don't fully understand. And with complexity comes mispricing risk and confusion about true returns. Reason 4, no downside protection. Despite what some assume, writing calls doesn't protect you when prices drop. MSTY still loses value just like the underlying stock, and it can do so quickly. Reason 5, the hype factor. High yields attract quick money. Many investors pile in without realizing that the huge income often coincides with steep capital losses. And finally, reason 6, opportunity cost. While MSTY's yield looks impressive, total returns may lag behind more stable ETFs. In other words, you might collect a lot of income, but end up poorer overall. So yes, there are clear reasons to worry. But to be fair, there are also some reasons why a small group of investors still find MSTY appealing. Let's flip the coin. Why are some investors still bullish on MSTY? First, the income. Few ETFs on the market generate monthly distributions this high. For income-focused investors, especially those with high risk tolerance, that's hard to ignore. Second, MSTY thrives in a volatile environment. If you expect Bitcoin or MSTR to keep swinging wildly, MSTY's option premiums could stay elevated, supporting those big payouts. Third, it's a unique strategy. The YieldMax suite is one of the few families offering targeted option income on individual stocks like Tesla, Nvidia, and MicroStrategy. For investors seeking something different, this is a niche play. And finally, some advanced investors use MSTY as part of a diversified income mix, a small, speculative slice designed to juice portfolio cash flow, not as a core holding. So, while risky, it's not necessarily useless. It just needs to be understood and managed carefully. So, should you worry about MSTY in 2025? Here's my honest take. Yes, you should worry, but maybe not in the panic sense. You should worry enough to understand what you own. If your goal is safe, steady dividend income, this isn't it. MSTY's returns will live and die by MicroStrategy and, by extension, Bitcoin's wild movements. If volatility drops or MSTR crashes, MSTY could see both shrinking distributions and falling prices. For aggressive investors who know the risks, MSTY can be an interesting income experiment. But for most long-term investors, the risk-reward balance just isn't worth it. Personally, I'd view MSTY as a speculative side position, not a core holding. A fun tool for active traders, not a stable income anchor. So yes, worry, analyze, and above all, don't chase yield without understanding the risk behind it. Going forward, here's what I'd keep an eye on: the volatility of MSTR and Bitcoin. Lower volatility means lower yields. MSTY's monthly distribution announcements, are payouts shrinking? Fund inflows and assets under management, is investor interest fading? And broader market trends: if risk appetite drops, these high-yield option ETFs can fall fast. If you're invested, stay informed. And if you're watching from the sidelines, that's perfectly fine too. Sometimes the best move is not to chase the latest high-yield headline. Thanks so much for watching. If you found this breakdown helpful, hit the like button, subscribe for more ETF and dividend analysis, and let me know in the comments What do you think about MSTY? Is it a smart high-income play? Or a ticking time bomb? I'll be covering other YieldMax ETFs in upcoming videos, so stay tuned, and as always, this content is for educational purposes only, not financial advice. Until next time. I'll see you in the next video.